Wednesday, February 20th, 2019, Maneco 64, home of alternative economics and contrarian views. Before I start this morning, I'd like to thank all my existing viewers, all my new viewers and subscribers for all the support, all the participation in the channel, all the comments, all the presence at the live streams, all the support also through donations, through using the Maneco 64 Teespring store. Thank you very much again. This morning I want to talk about China, the fact that as Jim Rogers has said in the past, the 21st century is going to be China's century, and I tend to agree with him. And the other factor I want to put into this is that if it's going to be China's century, it's going to be a golden century. And actually, I'm going to talk about an article in this week's Economist about China's gold business called The Bijou of Beigao. Streets are paved with gold in a Chinese town. Here's the story, and I'll go through it just to show you how important gold is to the Chinese. Before I go into that story, let's have a look at what the markets are doing here this morning. It's 8:15 a.m. London time. Yesterday, of course, was a very good day for the precious metals, especially gold. We were up over 1%. We traded up to 1341, I think the high was. And in my opinion, gold right now has been climbing a wall of worry. That's the way it feels to me. Up until a couple of days ago, we were testing the 1326 level, which was a key resistance. I think many people were expecting that to fail. Probably a lot of people piled in the paper shorts, and when it didn't fail, they had to short cover in the last few days, and that's why we've spiked quite significantly here, and we're very close now to that 1376 key level from the high in 2016. Silver didn't do as well yesterday, most of the day, but then it caught up towards the end of the day. So where are we this morning? Well, gold is up $2.50 at 1343.60. The high has been just under 1347 and the low 1339. Silver is up 7 cents at 1604. The high has been 1610 and the low 1595. I think the key level for silver now is 1620 on the upside. Stock markets, well, what did they do yesterday? Not much, really. The Dow was up 8 points, S&P up 4. NASDAQ outperformed a little bit. The composite was up 14 points. This morning, we're fairly quiet again. The Dow is down 5 as I speak, 25,889. S&P is unchanged, 2779, and the NASDAQ 100 futures up 5 points. So very quiet, the stock markets. Currencies, we saw for the UK viewers and myself, gold didn't do anything yesterday because the pound went up about 1%. So, but today the pound's down about 0.2% against the dollar at 130.40. And let's see where the XgCTCWb is. We're at 1030.75. So we are very near key resistance in the price of gold in pounds. If we break through 1031, that's a key level here right now. Of course, there's two things influencing the price of gold in pounds, the price of gold itself in dollars, and cable, the price of the pound in dollars. So with what's going on with Brexit, we're going to see a lot of volatility in the currency. So that is the reason why we see a bit of volatility in XAUGBP. But longer term, as I said, all fiat currencies are sinking versus precious metals. Euro 113.52, up 0.1%. Dollar yen 110.86. Dollar is actually up 0.25%. And the dollar is continuing to drop against the yuan this morning at 672, down a third. I saw some comments yesterday about, I think it was President Trump calling for a stronger Chinese currency. So not sure that has had an impact or if this is just, the market. Crude oil. WTI is up 0.25% at 56.60. So we're stuck around this 56 level, it looks like. Same thing for Brent, stuck around 66.35. Not much going on there. The bond markets this morning, while the 10-year yield is lower from when I spoke yesterday, we were at 267. Right now we're at 264.5. That's not a good sign for the economy. That means people are less confident about growth when yields drop. The 1 year to 5 year yield spread right now is at almost 8 basis points. So that again is not a good sign that the curve is inverting. China and the century of China, the century of gold. So this is what Jim Rogers said in 2013. And he's been saying that way before that as well. 21st century belongs to China, Jim Rogers. Not too late for America to regain preeminence, but the clock is ticking. What's worse, like a drug addict that doesn't know it has a problem, the US has been living off printed money and welfare, both corporate and personal. They no longer even realize they have a problem. There is no intellectual honesty in America anymore. The country must collapse before it can reboot and reset. We can only hope it happens quickly, as Nietzsche said. Only the weak fear chaos. And it goes on to say, the 19th century may have belonged to England and the 20th century to the United States, but the 21st century belongs to China, says American investor Jim Rogers. So some facts about China I want to bring up, because a lot of times we talk about China and never realize, how big and populous China is. So the population of China, as per 2016 estimate, was 1.4 billion. So the population of the US is around 330 million. So it's more than 4 times the US population. Its GDP per capita is still not that high. The PPP one is $19,000. It's 79th in the rankings. But if you go back 40 years, China is completely transformed. In this video, I'm not going to talk about politics, about what people think about China, the political system. This is just numbers. So what else? Gold reserves. You can see here, this is from Wikipedia, gold reserves, officially reported holdings, top 20 according to World Gold Council's latest rankings. As of January 2019, United States, 8,133.5 metric tons. Wow, that hasn't been audited since the 50s. No independent audits. A bit like the European Commission, they haven't had their accounts audited and signed for over 20 years. Germany, 3,369 metric tons. IMF, 2,814 metric tons. Italy, 2,451 metric tons. And you can see China is catching up. It's now got 1,842 metric tons. It's number 6. Russia is ahead of it. A lot of people argue that the Chinese, the official holdings of China is a lot larger than this, but I'm going through the figures. I'm not speculating. So you can see that's been, gradually growing through the years, through the turn of 21st century. So, some of you might be surprised I subscribed to The Economist. I started subscribing last year. I know it's a Rothschild globalist magazine, and a lot of what is in here I don't agree with. There's an article here, for example, this week where they talk about Putin's pipeline, Nord Stream 2. Right here, I'll quickly go through it. And they say that Russia invaded Ukraine, even though we know that it was NATO that started the coup there in the Ukraine, and Russia did not invade the Ukraine. Russia already had troops as per a treaty in Crimea. Crimea had been part of Russia in most of the recent history until the 1950s, when Khrushchev donated it to the Ukraine. And all that happened was that there was a referendum. About 92% of Crimeans said they wanted to be part of Russia. So that's The Economist for you. It's a bit of fake news, but they do have some interesting stories. So the one that I'm focusing on is this one here, China's gold business, the bijou of Beigao. I'm not sure I'm pronouncing that correctly, if it's Beijao or Beigao. But just to give you an idea where this place is, here on the map, you can see. So I'm going to read from this a little bit, from this, just to give you an idea of how gold is important to the Chinese. It says here, streets are paved with gold in a Chinese town. For decades after the rise of Mao Zedong, Chinese were banned from purchasing gold. The central bank, its only buyer, allocated it to a few state-owned jewelers. Only in the early 2000s was the ban lifted. Well, there you go. It kind of coincides also with when the price of gold bottomed, doesn't it? I know there were other factors impacting the price of gold then. The fact that European countries were limiting their sales of gold, that helped as well. But this is interesting. So when Shanghai launched what is now the world's largest physical gold exchange, and anyone was allowed to enter the gold business, it has flourished. During a Chinese gold rush created by jewelry buyers and bullion investors in 2013, bars in Western vaults were melted into smaller ingots and sent east. I think the Chinese like the kilo bars. So the central banks keep 400-ounce bars or thereabouts. GFMS, a precious metals consultancy, called this the largest movement of gold by value in history. And I think it's going to keep going. And it's physical. It's not ETFs. It's not COMEX futures. It's real gold. Chinese demand for gold jewelry has regularly surpassed that of India and America combined since then, accounting last year for 14% of physical gold demand globally. China has been the world's largest producer since 2007. This is the interesting part here. Yet it consumes even more gold, 1,089 tons. Then it unearths 426 tons. So it doesn't produce, it's the biggest producer of gold in the world, but it consumes more than twice of what it produces. And I'll just show you here the top 10 producing countries from this article here, usfunds.com, top 10 gold producing countries. You can see China here is number one, just over, around 426 tons, but they consume 1,089 tons. So huge demand. And that's just, that's just the public, not official holdings of gold reserves. What else? Flush with cash. Its miners are moving to the high street. China Gold and Shandong Gold, two state-owned giants that are the country's largest miners, have recently set up jewelry affiliates. I won't read through the whole article, touch upon one part that I think is quite interesting about the young Chinese. And it says here, today, young buyers think nothing of spending a few thousand renminbi on a necklace as a fashion statement, says Zhang Guowang, a fourth-generation jeweler who runs Huacheng Jewelry, one of the largest in Putian, with a few hundred stores around China. They are forcing the industry to modernize. Their parents preferred the saturated yellow of 24 karat gold, evocative of ingots, because gold at that purity is too soft for intricate designs and holding gems. Clunky jewelry had long been the norm, chiefly sold by the gram. Its main appeal was as an investment, recouped by selling the piece back to the shop. And it goes on to say, but young Chinese find 24 karat gold tacky. Many shops have introduced a matte range for them, and jewelers are increasingly using lower karat gold more creatively, and thus are able to charge a premium for design. Shanghai's oldest jeweler, Lao Feng Shang, has collaborated with Disney since 2006 to use its characters. Another shop, Shuanghuang Jewelry, is selling tiny globular gold pigs to fix as charms on woven bracelet for the year of the pig. There you go. There's not much else to say about China and its appetite for gold as a store value, as a status symbol, and I think gold is going to keep flowing from west to east. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. Take care. Bye.